Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Wednesday, the 11th of June, 2025. So before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right. So I hope that the screen is good. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday, as well as in today's early Asia session in terms of news flow, economic data release, and as well as their impact on the cross asset classes intraday price performance. All right, so yesterday was rather a quiet day in terms of economic data. So one data I want to highlight is more pertaining to UK centric data over here, which is the release of this UK labor market data, which came in below expectation. So what do I mean by that? Okay, so because it has an impact on the sterling cross pair and the sterling dollar. Okay, so yesterday we do have this release of the UK data. Okay, so UK labor data. So the unemployment rate actually tick up higher than the previous month of March. So this April, so it tick up to 4.6% from 4.5% was printed in March. So that actually came in within expectation. But however, the employment change, the absolute headline number actually fall beyond fall much more drastic than the previous month of March over here. So previously was 112k jobs added, but the employment change for April in UK fell to expand at a slower magnitude by 89k jobs added over here. All right. So what's interesting over here is that the average earnings on a 3-month rolling basis over here actually also came below expectation. Market expecting an increase to 5.5%. It came in at 5.3% in April. So with this kind of rather soft labor market data in UK, that the sterling pound actually took a hit against the dollar. So yesterday, the sterling pound was the weakest major currency against the US dollar, where it fell by negative 0.4%. So if you look at the sterling pound, the sterling versus the dollar, so this is the daily chart over here. So what you could see over here is that it fell by 0.4%. That means the sterling weakened against the dollar by 0.4%, and right now it's threatening to break below the 20-day moving average that has since been trading upwards since 19th of May. So a bit of short-term weakness that is being impacted on the sterling right now as we are speaking. So if you look at the 5-day rolling performance basis, right? So this is a 5-day rolling performance basis. The rest of the dollar pair starts to go sideways. So if you look at it over here, it's more like a sideways range formation in the dollar strength versus the other currency over here. So if you go to the 1-day rolling performance, all right, so the 1-day rolling performance, what you could see over here is that the dollar has starts to strengthen pretty steeply against the sterling, because as we are speaking right now, is 1-day rolling performance is up by positive 0.16%. And most interestingly over here is that the dollar now has starts to strengthen against the Aussie and against the Kiwi by a fair bit of positive 0.4% and positive 0.35%. That's against the Aussie dollar, but starts to go nowhere against the dollar yen, the dollar Swiss, and the dollar Chinese offshore yuan over here. All right, so what you could see over here is that a rather mixed bag in the FX market right now. So if you look at the chart of the dollar index, right? So this is a chart of the dollar index over here. So as we are speaking, it's up marginally 0.10%. So what you could see over here is that it started to, ever since 29th of May, that long bearish Marabuzu candlestick, where it got rejected by this descending trend line resistance that I drew from the medium term swing high of 13th of May, that ever since this Marabuzu candlestick is traded sideways, it traded down for 3 days. Then thereafter, on 2nd of June, which is last week, or not say last week, the start of this month, pardon me, it started to go sideways for almost 2 weeks over here, right? So if we look at the current situation right now, okay, let me put it in a different color. Okay, it started to trade in this kind of sideways range formation, right? In the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, last 2 weeks. In the last 2 weeks, sideways. So, but still holding below the 20-day moving average, which is acting as a intermediate resistance right now at 99.50, right? Which is also very close to the top of that sideways range as well, which is also the yesterday's intraday high of 99.39. So net overall, what you could see is that mixed bag on the FX market. That means no clear dollar weakness or dollar strength on the average, but if you dissect into individual pair, there could be some signs of interesting technical setup. Later I'll share with you on a intraday technical outlook perspective. All right, so that's pertaining to the FX market in relation with the lackluster UK labor data that was released yesterday. So another event that to take note of will be the conclusion of the second round of trade deals negotiation talk between these two superpowers, China and US, that took shape in London since Monday, which is start of this week. All right. So at the end of the second day of the talks, they finally concluded that they agreed on plan to reduce trade tension. So this agreement on plan that was going back to the earliest status quo, where the Switzerland trade deal, negotiation deal that took shape in early, somewhere around middle of second week of May, which is last month. So things goes back to that period in time. So what was agreed over here is that they have agreed to primary plan to ease trade tension, which could revive the flow of sensitive goods between the two countries. So the key aim of this meeting is for sure is that US is attempting to actually get more shipments of rare earth materials and magnets, and also China, on the other hand, they want to actually ask US to remove restriction on certain certain semiconductor chips related products over here. So now the key thing over here, the two negotiators from both sides has agreed to this, and the next step is to actually get the two respective president from China and US, that means President Trump and President Xi, to actually agree on whatever has been spoken on in the last 2 days. All right. Over here, so market actually rejoiced this, stating that since both countries are now in talking terms at this point in time, so we start to see a risk on sentiment in the major US stock indices yesterday. So what you could see is that all the indices closed in the green. So that is also came in within our expectation as well, since we're talking about since the start of this month, we have been having a intraday trend bullish bias on the major US stock indices that we covered on a daily basis, the Nasdaq 100, the Dow Jones Industrial Average, which is the Wall Street 30, and I also included the SPX 500 on the intraday basis as well, starting from last Friday over here. So the SPX closed 0.55%, the Nasdaq 100 closed 0.66%, the Dow Jones Industrial Average lagged behind but managed to have a positive gain of 0.25%, and followed by the Russell 2000 0.56% over here. And as we are speaking right now, there's a bit of a price action consolidation after yesterday's strong push up. Why do I say that? Because the E-mini futures on the SPX 500 E-mini futures and the Nasdaq 100 E-mini futures are down marginally to negative 0.3%. Okay, so later I'll share with you that is more likely a minor pullback, doesn't really constitute the start of a short-term bearish reversal scenario for the major US stock indices. So one thing to take note over here is that this positive feedback loop that is being seen on the major US stock indices has started to spill over to the ASEAN or the Asia stock markets as well, where the Nikkei is up 0.46%, the Hang Seng is up by 0.75%, and the Hang Seng Tech is up 0.64%. HSCI, which consists of the China shares listed in the Hong Kong Stock Exchange, they call it the H shares, is up by 0.78% over here. So rather a clear slew of positive feedback loop that is still pretty much intact on the global stock market as we are speaking right now. But however, later I'll share with you the Germany, the European stock market doesn't seem to be in a positive footing, because yesterday they actually all closed down marginally lower, with the DAX underperforming by negative 0.8% over here, but not much of a clear news data that actually driven that I could find that explain this underperformance of the European stock market yesterday. So it's more likely to be technical driven and positioning rather than a fundamental news flow that causes this European stock indices intraday underperformance yesterday against the rest of the world. Right, so that sum up the first segment of today's daily dose of market insights. Let's now move on to the second segment, which is the intraday technical outlook. Yeah, so on those broad-based cross asset classes. So let me expand my screen so that you guys could have a view of the charts in a better visualization. All right, so yes, so let's start with the FX market. All right, so over at the FX market over here, let's start with the euro dollar. So the euro dollar yesterday was trade in a very sideways range as well. So right now, it seems to us that it may stuck into this range for today as well, going neither here nor there, given the way the price action moved in the last two sessions, right? Okay, because there's a lot of whipsaw over here. There's no clear higher high or higher low, so indicating that the last Friday low, that rebound that lead on Monday, and whatever price action that followed through yesterday is neither not impulsive at all. So with that, this kind of sideways price action that overlap with one another, no higher high, no higher low, I'll be less convinced now to have a bullish bias on the intraday basis on the euro dollar. So with that, I will flip to a intraday neutrality stance for now, at least for today, to monitor how the price action move throughout today's session before I have a directional bias view. So neutral between 114.80 and 113.60 for now. All right, so unless we have a very clear bullish breakout above 114.80 today, then potentially my bullish bias view will reignite again to expose the next intermediate resistance in first step at 115.65, which is the one-time Fibo extension taken from the low of 12th of May, and as well as the upper limit of this ongoing minor ascending channel that I drew in turquoise blue, drawn from the minor swing low of 13th of May. Right, so that's for the euro dollar. Now onward next will be the sterling dollar. So the sterling dollar yesterday actually came down, all right, over here, and it actually now starts to trade in a series of lower high. All right, so what you could see over here, the sterling dollar, if I put the minor swing high on last Thursday at this 136.16 level, right, connect it to here. Okay. Okay, so there seems to be a minor descending channel that is being formed, or we call it a bearish flag formation, right? A bearish flag formation. So the key story over here is that given this a bearish flag formation, that is ongoing within its medium-term uptrend phase that is still intact. Why is it still intact? Because price action is still trading above the 50-day moving average that is still sloping upwards. All right. So what we could see over here is that there could be a risk that yesterday's slide is not game over yet because of it's now firstly in price action is trading within this bearish flag formation. And also what's interesting over here is that where there is no clear there is no bullish divergence on the RSI. All right, so the RSI shape a lower low, all right, similar with a lower low as well on the raw price action. All right, so there could be a risk that the sterling dollar may see a bit of residual push down towards the next support level at the 134.15, 134 figure level. Okay, let me put it in writing. Let me put it better writing. Oops, sorry. I think it should be this one. Okay, 134.15 slash 34 figure level. Okay, the lower limit of this bearish flag formation, and as well as the minor swing low, pardon me, of 29th of May and 22nd of May. All right, so I'll be using yesterday's level of rejection over here, where price action previously hit this bunch of congestion area at 135.35. We saw the upper limit of this bearish flag, this flag formation over here. I will say that this is a bullish flag, not a bearish flag, because I repeat again, this price action that's moving down it could be a minor bearish, a minor bullish flag formation, or a consolidation within a higher time frame trend on the sterling dollar that is still bullish. Why? Because the price action is still trading above the upward sloping 50-day moving average, indicating that the medium term uptrend is still pointing on the upside rather than downside. So what we are seeing now is a potential we call it corrective decline sequence, as it's now trying to actually take shape within a bullish flag formation. So what you could see over here is that potentially I will have this levels to watch will be at 34.15 slash 34 figure level. So that's the lower limit of this bullish flag. So at this point over here, potentially there could be a bullish reversal back on the sterling dollar. All right, so for now, given that the price actions has still some more way to go before 34.15 slash 34 figure on the sterling dollar, it gives me a bit of room to flip to a intraday bearish stance. But I got to bear in mind that this intraday bearish stance, I'm only looking at a corrective decline on the sterling dollar within a medium-term uptrend phase. That means the higher time frame is still pointing to a bullish bias over here. So using 135.35 short-term pivotal resistance, flip to a intraday bearish bias for this ongoing corrective decline to play out. Below 134.50, 134.50, 13450 exposes 134.15, 134 figure level. Only a bullish breakout and an hourly close above 135.35 that would invalidate today's intraday bearish bias view to kickstart a recovery scenario. Pointing up towards the intermediate resistance next to watch out for will be 135.90. Above 135.90 may see 136.40 next. All right, so that's for the sterling dollar. Next up will be the Aussie dollar over here. So the Aussie dollar, as we are speaking right now, yesterday we do have a bullish bias. So the bullish bias yesterday trying to actually see that that push up, but that push up as usual hit the resistance level at 65.37, 65.45 before backing back down again. All right, before it actually trace back downwards over here. So with this kind of scenario over here, what we could see right now is that, let me share with you guys. This is this. Okay, maybe I'll go to the 4-hour chart. Yeah, you're able to see much clearer. Okay, so what I could see over here is that since 7th of May, 13th of May, it's trying to trade in this kind of complex sideways range configuration. All right, this complex sideways range configuration. And at this point in time, what we could see is that price action in the last 5th of June, 9th of June, and as well as yesterday, starts to retest the upper limit of this complex sideways range configuration, but can't have a proper breakthrough in that sideways range configuration, and price action starts to retrace downwards. And what we could see over here is that the 4-hour RSI, okay, the 4-hour RSI from the support level here, it has broken down below the support. Okay, so this is the 4-hour RSI. So what we could see over here is that there is some form of downside momentum coming back into the picture on the very short-term basis. So there could be a risk that after 3 instances where price action try to retest the upper limit of this complex sideways range configuration that is in place since the month of May, or wait, not even on the month of May, pardon me, since late April. Okay, it started here since late April. All right, over here in this kind of complex sideways range configuration, there's a risk that it may do a slide to the middle part of the sideways range configuration, given that yesterday there's some bearish momentum that being seen on the Aussie dollar as it try to break through the upper limit of that sideways range. All right, so with that, I'll be using for sure the upper limit of this complex sideways range, 65 37, 65.45 as my short-term pivotal resistance level. We will flip back to a bearish bias for the price action of the Aussie dollar to potentially float down back towards the middle part of this sideways range, complex sideways range configuration, with the support level at to watch out for will be at 64.75. Below 64.75 may expose the 20-day moving average that is acting as a next near-term support level at 64.55 next. However, only a price action bullish breakout with an hourly close above 65.45 that would indicate a bullish breakout scenario on the Aussie dollar, where in first step it could expose the next resistance level at 65.80. All right, so that's for the Aussie dollar, flipping to a intraday trend bearish bias because of that bearish momentum that is being seen on the 4-hour RSI, which I explained earlier, using 65.37, 65.45 as my short-term pivotal resistance zone, potentially for it to float back down to the middle part of that complex sideways range configuration, at least on the intraday basis for now. All right, so that's for the Aussie dollar. Next up will be the dollar yen over here. So the dollar yen continues to trade within this kind of bearish wedge, ascending wedge formation, still holding below 145.35 short-term pivotal resistance level that we highlighted earlier on this when yesterday. All right, yesterday. So price action yesterday tried to hit our first support level, which is our downside trigger level at 144.40, and managed to survive entirely in the European session and as well as stretching into the US session as well. So for sure this 144.40 is a key downside trigger level that also confluence with the 20 and the 50-day moving average. So still no change, the key level still remains the same, given the fact that we start to face price action lethargic every time it tries to hit close to yesterday's session high, which is the 145.29 level over here. So given this kind of long tail doji like candlestick pattern that's being formed, that also represent the lack of upside momentum as well. So no change, 145.35, that will be my short-term pivotal resistance to look out for on the dollar yen for today. So we will maintain that intraday bearish bias, but price action now still got to break down fast below the downside trigger level of 144.40 to increase our conviction on the dollar yen for the next near-term support level to come in at least in first step on the intraday basis at 143.50 next. However, if price action starts to see a squeeze up above 145.35, that would invalidate our intraday bearish bias to see a further push up to revisit the 29th of May swing high area, the 15th of May swing high area, and the 16th of May swing high area, acting as the next intermediate resistance at 146.10. Right, so that's for the dollar yen. And also with that, let me share with you one cross pair that I'm taking a look at, also pertaining to the sterling weakness, will be the euro sterling cross pair over here. So the euro sterling cross pair yesterday did a strong push up yesterday because of that sterling weakness, breaking above this dotted neckline resistance of this very minor inverse bullish head and shoulder formation. This will be the shoulder, this will be the head, this will be the right shoulder. All right, so this is the inverse bullish head and shoulder formation. Yesterday it broke above the neckline, now acting as a key short-term pivotal support at 84.40. Yeah, 84.40. So using 84.40 as my short-term pivotal support level. Bullish buyers on the euro sterling for today on the intraday basis. Two near-term resistance level to watch will be 84.90, 85.10 over here. Then thereafter followed by 85.40, which is the minor swing high area of 30th of April and 2nd of May. And if you do the Fibo extension of this bullish breakout, taken from the low of that hit, okay, push it up and put it down to the low of that right shoulder, that 85.40 also confluence with the 1.382 Fibo extension. Only a bearish breakdown with hourly close below 84.40, then that would jeopardize yesterday's bullish breakout scenario to deem it as a failure bullish break up, and price action may float back down towards 84.10, which is very close to the 20-day moving average. A breakdown below 84.10, revisit the 200-day moving average and the swing low area of 29th of May at 0.8380 / 83.60 next. All right, so watching 84.40 short-term pivotal support on the euro sterling cross pair, bullish buyers for today. All right, that sum up the intraday technical outlook on the FX market. So now let us now move forward to the major intraday technical outlook on the major stock indices, starting with the Hong Kong 33. So Hong Kong 33, we now expectation burst up as expected, continues to swing a period of higher high, higher low. The RSI also continues to remain in a bullish momentum condition over here. What we could see is that shaping a higher low as well above the 50 level mark. Over here, price action continues to inch higher, hasn't hit the overbought region yet in today's Asia session. So with that, we will still maintain our intraday trend bullish bias right now with a slightly adjusted upward short-term pivotal support level, taking into account of yesterday's Asia session mid-session low, which is at 14,010. So 14,010 will be my 24,010. Pardon me, not 14,000. Okay, a bit of tongue twisting. 24,010 will be my short-term pivotal support level, adjusted one slightly upwards on the Hong Kong 33, maintaining our intraday trend bullish bias. Above 24,490, potentially sees 24,850 next over here. So what's 24,850? So it confluence with the medium-term swing high of 18 of March and 19th of March, and as well as the upper limit of this minor ascending channel that is in place since 16th of April low. Only a price action bearish breakdown and an hourly close below 24,010 that would negate today's intraday bearish bullish bias, that would negate today intraday bullish bias, pardon me, to see a minor corrective decline to revisit 23,750. If 23,750 can't hold, may expose 23,440 next, which also confluence very closely to the rising 20-day moving average. So that's for the Hong Kong 33. Up next will be the Japan 225, representing the Nikkei 225. So the Japan 225 continues to do another second test at our first resistance level that we highlighted yesterday, 38,460, before it got rejected in the last 4 hours or last 2 hours as we are speaking in today's Asia session. So this is indeed a clear stubborn resistance that you got to surpass, which is 38,460. But however, price action on the hourly RSI continues to be in a bullish momentum condition, as what we could see over here is that it continues to see a series of higher low holding above this parallel ascending trendline support, and also holding above the 50 level mark over here. So indicating no signs of a bearish reversal that is being seen on the hourly RSI right now. So with that, because it can't break above the 38,460, I do not want to tighten my pivotal support level to be so tight. to place it at yesterday's minor swing low, which is 38,160. So 38,160 will still be my first support level to watch. Pivotal support remains the same at 37,920, unless it can break out above 38,460. Then I will tighten my pivotal support to 38,160. So still using the 200-day moving average at 37,920. The short-term pivotal support remains intact or unchanged for now to maintain that intraday bullish bias for the Japan 225, given that positive observation that is still being intact or seen on the hourly RSI, indicating that there is no sign of a bearish reversal yet on the Japan 225, despite the third test on the 38,460. So above 38,460 exposes the next resistance level at 38,850 for now. Only a bearish breakdown and an hourly close below 37,920 that would invalidate our intraday trend bullish bias for the Japan 225 to kickstart another round of choppy corrective decline sequence, exposing the next near-term support at 37,680, which confluence with the 20-day moving average. A breakdown below it may see a deeper slide to revisit the minor swing low of 2nd of June and 5th of and 5th of June at 37,270. Next up will be the Germany 30. So the Germany 30 yesterday broke down below our short-term pivotal support at 24,030, which is also the 20-day moving average over here. Price action now trying to the hourly RSI is really at the oversold level over here, oversold level. So given that it's now trying to retest the minor swing low of 3rd of June over here, so given the fact that there could be a over here, so what we could see over here is that the hourly RSI may start to shape a bullish divergence as well. Okay, given the fact over here is that we got to wait for the hourly close, okay, because right now it's 11:34. So if it starts by the time, if it's at 12 p.m. Singapore time, it starts to slope upwards. So there could be a sign of this is a sign of a bullish divergence on the hourly RSI. So given the fact that mixed element, what we're seeing right now on the Germany 30, so we will flip to a intraday neutrality stance for today. So neutral between 23,900 and 24,240. That was the resistance that's being seen yesterday, where it shaped that sell off during the European session yesterday. So 24,240, pardon me, 24,240 upper limit of today's neutrality stance. Lower limit 23,900. All right, so that's for the Germany 30 for now. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30, for the 1, 2, 3, the fourth time, it can't break above the first resistance level at 24,870 over here. Okay, let me, all right, 42,000, not 24, 42,870. All right, let me put it up here. Okay, so given that it can't break above 42,870, I do not want to tighten my short-term pivotal support to be so tight at 42,580 level, this level here, which confluence with the 200-day moving average. So this will be my first support level to watch as well, 200-day moving average, and also confluence with this medium-term ascending channel support that I drew from the low of 7th of April. So the pivotal support on the US Wall Street 30, what I'll do over here is that I will still maintain the same level, which is at 43,310 over here. So that is also confluence with the 20-day moving average, where previously price action managed to dip on the 30th of May, and there is rebound that is being seen earlier on. All right, so this is also a very key support level indeed. All right, so every time price action dip at the 20-day moving average on 30th of May, on this 2nd of June, and as well most recently on 6th of June, which is last Friday, price action managed to shape a bounce off it. So still remains the same, 43,310 short-term pivotal support level, maintain that intraday bullish bias, but price action for sure got to break out above the first resistance level that it has been stubbornly being put as a cap for the bulls since last Friday. Tested how many times? 4 times so far. So above 42,870 may see that short-term bullish breakout towards 43,085 next and 43,290 next. All right, so 43,290 is this minor swing high area of 4th of March. However, a price action suddenly have a U-turn bearish breakdown with an hourly close back below 43,310, then this bullish bias view will be invalidated to see another round of choppy corrective decline sequence, exposing the next near-term support level at 42,100, 41,850 next. All right, next up will be the SPX 500. So the SPX 500 continues to shape a series of higher high and higher low, hitting our first resistance level at 66,050 level before shaping that minor pullback during today's Asia session. So with that, it continues to actually trade above this medium-term ascending channel on the since the low of 24th of April. All right, this medium-term ascending channel support level. All right, so now it's acting as a intermediate support at around this 59 at this 6,000 level. Okay, which is also a psychological level as well. 6,000. Okay, so using a slightly lower level over here, which is the 5,980. So if you do that Fibo retracement, all right, of this ongoing minor swing up ever since the steeper pullback that was seen on 5th of June all the way down to the low of last Friday, you do the Fibo retracement until the 6,050, which is yesterday's intraday high. That 5.5980 actually confluence with the 50% Fibo retracement as well. All right, so with that, using a slightly adjusted upward short-term pivotal support level for today on the SPX 500, 5980 short-term pivotal support, we will still maintain our intraday trend bullish bias for the SPX 50 above 60.50 exposes 60.93 intermediate resistance next. Only a bearish breakdown and an hourly close below 59.80 that would negate our intraday trend bullish bias to kickstart a minor corrective decline sequence on the SPX 500 to revisit 59.40 again, which confluence with the upward sloping 20-day moving average. All right, so that's for the SPX 50. Next up will be the Nasdaq 100. So the Nasdaq 100 continues to churn upwards as well. Over here, hasn't almost hit our first resistance level before shaping that minor pullback over here. So what I could see over here is that it's trying to actually now involve within a minor ascending channel that I drew from the low of 23rd of May over here. So what you could see over here, there's this key support zone, 21,640, which is the upper limit of the lower limit of this minor ascending channel, and 21,500, which confluence with the minor swing low of last Friday, where it shaped that minor V-shaped bullish recovery or bullish reversal scenario, and so confluence very closely to the upward slope, this upward sloping 20-day moving average as well. So I'm having a kind of a support zone over here, 21,640 / 21,500 short-term pivotal support zone to maintain my intraday trend bullish bias on the Nasdaq 100. Two key resistance level to watch today: 22,050. Above it sees 22,200 / 250 area, which is the all-time high area over here. So having a bullish bias in any form of a minor we call it a dip downwards on the Nasdaq 100, as long as it didn't break below 21,640 / 21,500. Only a bearish breakdown below 21,500 that would invalidate today's intraday bullish bias on the Nasdaq 100 to kickstart another minor corrective decline sequence to expose the next near-term support level at 21,180 / 21,015. All right, so that's the intraday technical outlook on the major stock indices. Let us now focus our attention towards the commodities asset classes, starting with the gold XAU/USD. So for gold XAU/USD, yesterday we have a bullish bias. Why? Because price action can't break below the 20-day moving average, and indeed this 20-day moving average has been providing a solid intraday support since the start of this week on Monday. Hit, bounce, hit, bounce, and yesterday it hit our first resistance, got rejected, came down again, and now attempting to bounce. And right now, the way it bounced, right, it starts to have a very clear higher low over here, and also the hourly RSI has starts to see a series of higher low as well, and now going above the 50 level and haven't hit the overbought region yet. All right, so indicating there could be a chance of a bullish breakout during the start of the European session above 33.46, given the strength of the bullish momentum that is being seen on the hourly RSI. So with that, because since haven't broken above 33.46, I do not want to tighten my short-term pivotal support to be at the 33 figure level. So I'll be still using this zone here, 32.77, 32.52, which is the rising 50-day moving average. So this zone here will still be my pivotal support zone, 32.77/32.52, short-term pivotal support zone. Maintain intraday trend bullish bias for a potential bullish breakout above 33.46. Potentially sees the next resistance coming in on the intraday basis. Let me put it for you guys. Okay, so this will be the next level at 30. Okay, 1 second. Okay, 33.74 or 3074, we call it 33.74. So above 33.74 may revisit 34.17, 34.35 next. All right, which is the previous minor swing high area of 8th of May and as well as 7th of May. All right, so 33.17. Okay, so 33.17 level. Okay, yeah, this area here, 33.17. Okay, only a price action bearish breakdown below 32.52, then that would kind of, okay, sorry, let me do the adjustment again, so it's a bit, okay, 1 second, let me do everything, adjust it. Sorry, there's a typo error. It's 32.77, 32.96. Okay, okay, this 3,252. Okay, let me put it in writing again. Okay, so right now, the pivotal support zone will be at 32.96, which is the minor swing low on Monday, and lower limit 32.77 over here, which is the rising 50-day moving average. All right, so as long as this pivotal support zone holds, maintain our intraday trend bullish bias for gold XAU/USD, given that the hourly RSI continues to show that bullish momentum scenario. Yes, it got rejected yesterday at 33.46, but this bullish momentum may see it able to push through at 33.46. All right, so above 33.46 exposes the next intermediate resistance at 33.74, which is the minor swing high of last Friday. And above 33.74 may see 34.17/34.35 next. Only a bearish breakdown below 32.96/32.77 that would invalidate today's intraday trend bullish bias to kickstart another round of choppy corrective decline sequence, exposing the next near-term support level at 32.52, which is the minor swing low area of 29 May. Below 32.52 may see a deeper slide to the medium-term pivotal support zone at 32.20/32.04, which is confluencing with the medium-term trend line that is in place since 31st of December 2024 low over here. All right, so that's for gold XAU/USD, still maintaining that intraday trend bullish bias. Next up, lastly, will be the West Texas crude oil over here. So the West Texas crude oil yesterday managed to hit our first resistance before shaping that pullback. Now hitting our first support level at 64.68 before attempting to stabilize after yesterday's intraday pullback that has kickstarted during the US session over here. So the hourly RSI seems to have formed a support level. Oh, sorry, over here. Okay, there seems to be a support level that's being formed. So with that, still maintaining that intraday trend bullish bias for West Texas oil. So using the 64.06 as my short-term pivotal support level remains unchanged. So that was the previous range resistance broken out, turns into a key pullback support level 64.06. So 64.06 short-term pivotal support on West Texas oil. First resistance level to watch remains the same at 66.27. Only above 66.27 may see 67.35 next on West Texas oil. Only a bearish breakdown below 64.06 will invalidate today's intraday trend bullish bias to kickstart a choppy correct decline to reintegrate back below the range. Next support level to watch will be 62.74, which confluence with the 20-day moving average and very closely the 50-day moving average as well. So that's for West Texas oil, maintaining our intraday trend bullish bias using 64.06 as my short-term pivotal support level. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today in Wednesday session? So Wednesday session over here, other than the US core inflation rate that is up at 8:30 p.m., which is very key, a tier 1 data, UK timing at 12:30 p.m. UK timing. All right, so where is it over here? Yeah, 12:30 p.m. So the UK Finance Minister, just Chancellor, will speak in the UK Parliament regarding about her budget plans over here. All right. So she continues to defend her high spending plan that include 39 billion pound to be allocated for housing plan and investment in transport, energy project, and hospital and school. So basically about of infrastructure and public housing plan. So she will defend her 39 billion physical spending plan in the UK Parliament at 12:30 p.m. UK time. So Singapore timing will be around 7:30 p.m. Yeah, 7:30 p.m. Singapore timing. So with that over here, that could be also a key data to actually look out for. And definitely the key event, I would say not data, key event to look out for that could influence the sterling dollar and the sterling crosses. And the next tier 1 data will be focusing on the US side of the thing, 8:30 p.m. core inflation rate. So core inflation rate, both on a month-on-month basis and a year-on-year basis, market participant expecting a slight uptick. So that has really been priced in the market. 2.9% year-on-year increase from 2.8% in the previous month of April, and on a month-on-month basis, also one month-on-month basis, also a slight increase to 0.3% to 0.2% after taking account of that 10% base tariff that US hit on the rest of the world. So something to look out for at 8:30 p.m. Singapore time that could impact the major stock indices and the major dollar pair. Then other than that, we have the usual weekly US EIA crude oil stockpile change that could potentially sway the movement of the West Texas crude oil on a short-term basis. The data will be out at 10:30 p.m. Singapore time. And thereafter, we will have a quiet US session in terms of economic data release. Over here, no Federal Reserve official speaking. So with that, that potentially, yeah, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.